Well, one of the good things about our enterprises is that Ken and I remain in touch with individual household clients through that very first company. But in the second company that we started was Ocean Park, where basically we managed accounts for unaffiliated advisors and their clients. Later, when we developed the mutual funds, we of course began to market more formally to the financial advisor community. But what we found through hundreds and hundreds of discussions with individual investors was what their risk tolerance was and what their objectives were in terms of portfolio management, and that carries forward to this day.
One thing that we realized is that people with large amounts of wealth typically avoided stocks.
The philosophy that led us to develop the specific strategies was based on hundreds of talks that we gave, seminars with individual household clients, and then meetings with them. And what we determined is that clients really want two things. They want risk mitigation so that they're not going to have their accounts go down 20, 30% at any time, regardless of severe bear markets in the stock market. And they want a decent return on average. So we designed our strategies to specifically limit downside risk, but also to look globally at opportunities in various markets.
Thinking back, it's interesting. I asked myself, what was our guiding philosophy? Basically, it was to reduce the risk in client accounts to an acceptable level. So we spent a great deal of time trying to define what that level would be, and then making sure that our mathematics were robust enough to achieve that outcome.
The unique part of our approach was to focus on keeping the client out of trouble. And what that means is limiting drawdown, because investment professionals know about standard deviation and correlation and beta and Sharpe ratio and Sortino ratio. But the way market risk affects the end user client is drawdown from the top price to the bottom price, which can be months later or even years later. Clients see this in their statements, and they don't want to see month after month 5% lower again, down 20% from January. So we focus very intently on risk mitigation.